Welcome back. And in our business news, the UAE delegation, led by Sultan bin Saeed Al Mansouri, the UAE Minister of Economy, has concluded a visit to the Italian Republic, where they met with senior Italian officials in Rome, Lazio, Ancona, and the Marche region. Both sides discussed during the visit ways to enhance the prospects for economic cooperation and trade relations between the two countries, as well as strengthening the relationship between businessmen and investors from the UAE and Italy, especially in the areas of healthcare, renewable energy, fashion and food. Al Mansouri noted that trade rates between the two countries increased by 20% during the first quarter of the year and jumped to $5 billion in 2011. And Italian exports to the UAE grew by 28.5% during 2011, while the UAE's exports to Italy grew by 91.2% during the same period. Good news for job seekers in the UAE. 25% of companies in the country are expected to hire new staff this year, according to recruitment industry insiders. A local report showed that with an upturn in the Dubai jobs market, a growing number of people are ditching the daily Dubai to Abu Dhabi commute in favour of jobs closer to home. Compared to last year's 4.9%, salaries in the country are expected to rise up to 5.1% this year, in addition to attractive packages that include housing and travelling allowance, as well as leisure and entertainment benefits. In an exclusive interview with City 7 Television, Charterhouse Recruitment in the UAE revealed that there is a vast amount of recruitment activity across the finance, human resources, marketing and legal sectors.
We've clearly seen a bit of a shift more latterly back towards Dubai. You know, the broader commercial base that Dubai has historically been renowned for is generating job opportunity. Comparing that to Abu Dhabi, which is typically more government-based, there has been a shift back towards the Dubai market in general terms.
The director of Charterhouse Recruitment UAE added that once there is more certainty within Europe and the euro, local banks will be less cautious when hiring banking professionals in the market.
Well, we've all heard about the European debt crisis, which is ongoing, and clearly that has a knock-on effect to this region in various forms. From a banking and financial services perspective, you know, the international banks and the local banks based in this region have exposure to that debt crisis and concerns about it. So naturally, their hiring strategy becomes quite cautious, and that has a knock-on effect on job opportunity and volumes in the market.
Emirates Airline has announced that it has fully repaid a $550 million Sukuk, its first ever, that matured today on June the 18th, 2012. So with that, let's now take a look at the stock indices across the GCC. Markets kicked off the trading week on the news that the pro-bailout party, New Democracy, emerged victorious in the general vote, initially taking the euro crosses higher against the major counterparts. With the focus turning to the central banks again this week, we earlier spoke with Gaurav Kashyap, the head of the DGCX desk at Alpari Middle East.
The markets kicked off this week on a very positive note, with the euro opening the trading week at a higher gap against its major counterparts. Now, obviously, following the Greek elections from yesterday, the pro-bailout party, New Democracy, has secured a majority of the votes, and as a result, we saw the euro moving higher. But ever since then, it has moved lower to cover the gap, and this pricing action is very similar to what we saw last week after Spain was announced, given the 100 billion euro bailout. Now, what this shows us is that the immediate impact on risk sentiment was very positive, taking the markets higher. But overall, the markets did tend to move lower, with the yields on the 10-year Spanish yields increasing to its record levels to 7%, whereby it was very, very unstable. Now, we expect a bit more of uncertainty with regards to the euro. For the time being, the Greek story will move to the background. We will see the ND party trying to form a coalition with the POSAK, and this will continue to see slight changes in risk sentiment. Overall, it's going to be a very, very big week for the central banks. The Bank of England will be releasing their meeting minutes. We don't expect to see any changes in the MPC voting, which expects to remain at 9-1. They did keep asset purchase target unchanged at £325 billion, and we should probably get some more details with their views on with regards to inflation and the unemployment in the UK economy.